Ladies and gentlemen, April, time for our monthly video with Egon von Greyerz. Egon, welcome. Wherever you are, you look still good. Glad to see you.
Thank you, Jan. Well, I'm still fortunate being healthy and trying to survive in this very difficult climate when you're not allowed to travel anywhere, where you have to quarantine and etc. So they're making it tough for us. And the problem is you have vaccines, you have tests, but government don't trust any of this, because if you have a vaccine, which I don't at this point, you still must go into quarantine, and you've done the test, you still have to go into quarantine. So it's a strange situation, and I did. When are we going to get over this? Who knows? Because governments don't know what to do. It was going to take a long time, I think, sadly, but we shall fight on.
We shall overcome, Egon.
Absolutely.
Yes. We have interesting stuff to cover, the current situation at the markets, the debt level, but let's start with a little crypto episode, because there is a big movement, and I found there recently a quote from Jerome Powell that blew my mind, maybe because of insanity. He was really saying cryptocurrencies are speculation vehicles like gold.
Yeah.
Please give us a comment on that. He must be hardly to describe.
Yeah, but first he says Bitcoin is speculative, yes, and not a means of payment. But as you say, and then he says it's a substitute for gold rather than the dollar. And he, as a head of the Fed, they've got the Fed and the U.S. government are supposed to have 8,000 tons of gold in their coffers. I don't think that they have the same amount in Bitcoin. So if he says Bitcoin is a substitute for gold, why doesn't he get rid of his gold? Maybe he has already, actually. Maybe he has sold, which I think at least half of it. But if he says, why don't they put Bitcoin in Fort Knox instead? That's fantastic. If it's a substitute for gold, I mean, they're mad, they're crazy. How can he say that? They're having, which nobody believes, or serious people don't believe that they have 8,000 tons. But let's say that they have 8,000 tons, so they have that. So why do they have that if it's the same as Bitcoin? It would save a lot of money and security and transport and all of that if they put Bitcoins on a little memory stick and just stuck it into a little safe deposit box somewhere. That's all they would need to do. It's crazy. It's obviously not a substitute for gold. Gold is something that central banks and bankers and the world has used for as a means of payment and as a wealth preservation object for 5,000 years. 10, 15-year-old digital currency is not going to replace that. So he's talking absolute nonsense, and I don't think he knows what he's saying. At the same time, Yellen has said many times that Bitcoin or cryptocurrencies are not ever going to replace the real currencies, i.e. private digital currencies are not going to replace them. And it is clear that one day we will get, as a solution to the currency crisis that's going to come, i.e. the collapse of the dollar and other currencies, it's clear that we will get a new central bank digital currency and that many countries will issue. But that will take at least 5 years, and before that, currencies have collapsed around the world. If Bitcoin ever gets to a much higher than this, or to the levels that people talk about, hundreds of thousands of dollars or more, central bank will obviously not accept that as an alternative to fiat money, and they will ban it. I'm absolutely certain. It might be a good speculation. It might get to $1 million. I doubt it, but it could do. But it also might get to zero Bitcoin, and therefore I don't think it's got anything to do with wealth preservation. And anyone who wants to speculate a bit, take the risk, and it goes up 10,000 or 5,000 one day and down 10,000 the next day, like it has done now. High risk. Gold is the real asset to hold if you want to preserve wealth. It's so simple.
Egon, and to stay with insanity, I have two graphics prepared for our audience, the global debt and the global stock market valuation. I'd like to show this first. Egon, here I found a very nice graphic that shows the current insanity. The situation is now like after World War II. Never in peace times or in relatively peace times a situation like this happened.
You know, World War II was after a period of several years of first depression and then the war. Incredibly, you know, so basically it started, the economic period started at in the early 30s with the depression, and then then the war started. So there was obviously activity in making weapons and roads, etc., depending on which country you were, like Germany did to a great extent. That time, money printing, as we see here, was totally natural, and low interest rates, because the countries needed to borrow a lot of money. Germany, US, every country that was in the war needed to borrow a lot of money. But here, we've had a period of economic prosperity. And why the hell do you need to borrow so much money if there is prosperity? You know, you should generate cash rather than have to borrow cash. So here you have central banks now having borrowed, having 130% of GDP, as this shows, at the peak, and still going up. The reason why they're not borrowing money because the countries are in depression or are destitute. They're borrowing money because they've mismanaged the economy. They're creating money in order for the boom era based on total fake money and speculation can go on, because they are absolutely petrified of markets crashing, because markets crashing means that they lose control of the economy, and they lose control of interest rates, and they lose control of the bond market. That's going to happen anyway. You shouldn't have, in so-called boom times, which we aren't really in, but that's what the stock markets are saying we are. You shouldn't have maximum borrowing and minimum interest rates. In a war or after depression, that's okay, but not now. It's totally the wrong time. And that shows you how totally mismanaged the economy is. And you know, with the asset prices, of course, reflect this in stocks and bonds and property. Gold has not reflected anywhere near any of this money printing yet. That's still to come, and silver, of course.
Mm. And to stay with insanity for a moment longer, here is the global stock market valuation. Here we have it, Egon, from Twitter, from Holger Czepitz from Welt. Very interesting graphic. The insanity continues with money printing like there's no tomorrow.
Yeah, well, you know, you just look at the 2009 low here, under 30 trillion, and now it's 112 trillion. And we know why. It's not because, you know, industry is doing well due to high efficiency or productivity or demand. It's just only due to just a lot of money being printed. And it's frightening. And you know, we have so many measures, Jan, on stock market overvaluation. I mean, I showed some time ago in my article and the Buffett indicator, which is market cap to GDP. You know, it's exactly the same. Market cap now, US to GDP is almost 2 times GDP. At the peak of the 2000 boom, you know, especially the tech boom so that ended in 2000, market cap to GDP was about 1.4, and now it's 2. You know, it's 40% above the 2000 high. So this is the bubble of all bubbles, Jan. And this is going to end badly. We don't know when. You know, it's gone on longer than I would have thought was possible. I still think that we are very near top now. We might even have topped or are topping right now. The Nasdaq might have topped already, and you know, the Dow is showing signs also. Markets always turn when no one expects it. Everybody thinks now we're getting out of COVID, things are going to improve, lots of money printing, etc. This is going to continue to go up, but markets never turn when everybody expects us to do that. But right now, it is possible that we're going to see a turn. No use forecasting exactly, but just looking at the risk, which is important, Jan. And the risk is that if you hold shares, you are going to lose a major part of your wealth in coming years. And as I said before, I think gold, in relation to if you take any stock market in relation to gold, stocks are going to lose at least 75, maybe 95%. Nobody believes that's going to happen. But, this is the bubble of all bubbles. In 1929, the Dow lost 90%. The index lost 90%. And it took 25 years before it went up to that level again, that it was in 29. And, the economic situation was much, much better then than it's now. To lose 90% now, I think it's inevitable. And especially if you measure it in real times against gold, because gold relatively is going to go up so much more against stocks this time than it's ever done before. So people are going to, I said, get really, really hurt if they stay in the stock market, which 95% at least of all investors will do, of course. So there'll be a massive wealth destruction coming on, as we know, sadly.
The majority was always wrong, Egon. And before we mention the silver topic also, because this is important with the synthetic silver and the crisis developing there, I have another interesting graphic that shows us that probably a very big commodity boom is on the horizon and that people should shift at least a part of their assets into still cheap commodities. Let me show the graphic. Here it is, Egon, also from Holger Czapitz, from the 28th of March, from Twitter. All-time lows of real assets in relation to financial assets. This is also because of the financial assets are that much overvalued that the commodities are in relation to it so cheap. But I think, and it has already started, the turn is on the way.
Yeah, I mean, this is the most wonderful graph, Jan. Basically, it tells you that close your eyes, buy real assets. And of course, here it says real assets here is defined as commodities, real estate, and collectibles. I would say that real estate is overvalued now. So I don't think I wouldn't recommend people to go into real estate because that's been a bubble now for quite a few years. Own your own property, that's fine, but don't buy if you can afford it and if you can afford the mortgage. But otherwise, don't buy investment properties. So I think when we talk about commodities, food prices, we're talking about assets in the ground, minerals, etc., and especially, of course, gold and silver. And you mentioned silver. Of course, silver is likely to move twice as fast as gold, so to move up twice as fast as gold. So we're going to see a real move in silver. But I always warn investors that don't have too much silver because the volatility is massive. So it's better to have the majority of your precious metals in gold, but then have some in silver because that's going to be a hell of a ride. Yeah.
Egon, close to the end, please give me an update about the silver situation because you deal with it on a daily basis and you have the contacts to the smelters and the big producers. Do you see now a shortage? Recently, I saw that the Jeff Christian published the premiums for 1,000-ounce bars are rising, but they are still okay. What is the physical situation in the silver market that you witness?
Yeah, it's such an interesting situation, but it's not straightforward. Retail silver is still fetching big margins of up to 50% for retail coins, 30 to 50%. For some people are charging certainly 30%. Some of the mints, are reporting, like the Perth Mint, are saying they can't deliver any silver, even against people who have paper certificates of synthetic silver with them. This is a mint, and they had the same problem back in 2011, I think it was. They couldn't deliver either. They took 6 months to get delivery, and the Perth Mint is partly owned by the government of Western Australia. So it's quite amazing. So they are issuing, like the COMEX and everybody else, they're issuing contracts that they can't honor. There are anywhere between 500 and 1,000 times more paper silver than there is physical against it. So obviously this market will at some point just explode when the paper holders one day wake up and say, I'm going to take delivery. So, but as I said, it's already happening in places like the Perth Mint that people can't get delivery of silver they bought already, and they're supposed to. They say 4 months delay, etc. So, I mean, again, it strengthens our argument that you mustn't have paper silver, you mustn't have ETFs, you mustn't, or gold for that matter. You mustn't own a fund. You must own it physically in your own possession and store it in a very safe vault. So wholesale silver, which is interesting, at our level for big investors, where we're buying the 1,000-ounce bars of silver, we can get hold of that still. But I think that's because it is, that is silver that's being lent between bullion banks, etc. So that there is still silver at that level. But I think underlying all of that, because of the massive amount of paper silver being issued, I think there is a shortage. Although, as I said, you can at the professional level get a hold of silver, but not at the retail level. So it's a very interesting situation. I think it will end badly, very badly, i.e. good for the silver price, but badly because a lot of investors are not going to get the silver.
Good final words, Egon. The key point is to have it in your own possession, or at least to have it stored with a trustworthy authority, like your company, for instance. Good final words, yeah. Egon. I wish you the best, and let's see what happens during the next 4 weeks. Thanks for today, Egon. Bye-bye.
Thank you, Jan. Good to talk to you, as always. Thanks.
Bye. Bye.